There's something powerful about service. Even if you haven't worn the uniform yourself, chances are someone in your circle has. Family, a friend, a neighbor, a colleague. Today we take a moment to recognize them, especially in a year when we're reflecting on our nation's history. It's a meaningful opportunity to pause and simply say thank you. With that appreciation in mind, it's important to understand that those who served often face a financial landscape that's a little different. There are unique opportunities, benefits that can build a strong foundation, and at the same time, complexities that aren't always easy to navigate alone. At Foster Group, we're proud to have team members who have served our country, and we're equally honored to serve clients who have done the same. Joining me today is someone who lives that mission daily. He transitioned from serving our country to serving clients with the same level of commitment and leadership. Dan Hawthorne is an advisory team manager at Foster Group. He has the dual role of advising clients directly while also leading, coaching, and developing a team of advisors. Prior to joining Foster Group, Dan served 24 years in the U.S. Air Force as a SERE specialist, an elite field focused on preparing warfighters to survive extreme conditions and return home with honor. He retired as Chief Master Sergeant E9, ranking in the top 1% of the enlisted force, and held senior leadership roles across multiple organizations. His career included deployments to combat zones and assignments in over a dozen countries across 5 continents. His excellence was recognized with honors including Air Force SERE Specialist of the Year in 2014 and USAFE A3 Senior NCO of the Year in 2015. Today, he brings that same leadership and mission-driven mindset to serving clients, especially fellow veterans. He also happens to be one of the nicest guys you'll ever meet. Dan, thank you for your service to the country, and welcome to this special edition of Financial Perspectives.
Thanks, Gretchen. I really appreciate that introduction. You know, topic is very personal to me. I know how service can shape a family's life, and it's really helpful to have someone along the way to help you connect all the pieces.
So Dan, I'm sure the listeners are wondering, 24 years in the military, and now you're a financial advisor. So tell us just a little bit about the path that brought you here in your story.
Yeah, I'm sure it's not a traditional path. But if I look at 24 years of service, one thing that I realize is I look at my time there and then my time here at Foster Group is I think it's connected by one common thread. And I feel like that thread has become my purpose, and that is serving others. As a SERE specialist, we help people survive some of the most challenging situations they could ever face and return to their family. So it was really a helping profession. And this profession is also a helping profession. There's a lot of tough financial decisions that people have to make. And it's just helpful to have someone come alongside you along the way and help you. So serving others is really what ties it all together. Also, I'm an intentional planner at heart. So several years before I got out of the Air Force, before I retired, I started thinking about what I wanted to do. And I actually reached out cold to Foster Group. I knew nobody here. I have no family in Iowa, but I knew I wanted to live in Iowa. So I reached out and just asked them questions about what it was like to work at Foster Group, what it was like to be a financial advisor. And I think at the time when we finished talking, they thought, we're probably never going to hear from this guy again. Well, a few years later, I'd finished my master's in family financial planning because I decided I was going to go this route. And I had this opportunity to spend about 6 months at the end of my career in a program that allowed me to work in private industry while I was still in the Air Force. And so I reached out to Foster Group and I said, hey, remember me? And Foster Group offered me a training opportunity, which I'm forever grateful for. And I'm also grateful for our nation just for giving me that opportunity to transition really well after 24 years of service. And it's just really been a blessing. And one thing I really hope for all veterans is that they could have as smooth a transition as possible. And I hope to help as many veterans as I can have a transition like that.
Yeah, well, we're lucky to have you. And I just love your heart for wanting to serve others. So, we talked a little bit about how military benefits are a bit different. So just talk about some of the challenges that you face when you're doing financial planning for veterans.
Yeah, there's a lot of benefits that exist for veterans. And they can be very complex. There's a lot of unique language, which veterans are familiar with a lot of it, but it may not be something that everybody's familiar with. It's not common knowledge. And the veterans really don't get exposure to a lot of it until the end of their career. And they take part in some transition programs. These transition programs are very broad. and they're not really personalized to each veteran and each family situation. So there's really nobody there to tie this all together for them. And what I've found is the result is a lot of these benefits are underutilized or even unused. And we're talking about benefits that could benefit them greatly. So when we look at all those rules, the moving parts and the unique language, most people just have trouble connecting all the dots and applying it to their situation.
So can you give some examples of how you've helped people get some of those benefits that they've earned that maybe they were not getting?
Yeah, I'll just give a couple of examples. One real common one that comes up, and I would say with both of these examples, I've had multiple cases, multiple clients, and even personal friends that I've helped through this. One of those that comes up is education benefits. So veterans have access to a lot of different education benefits. And in some cases, before they got out of service, they transferred some education benefits to their children. And then when they got out of service, they became eligible for some disability-related education benefits for their dependents. And what ends up happening there is if things are not coordinated correctly, some of those benefits could be underutilized. So we really want to maximize those benefits, and that requires strategic planning because there's other moving pieces and parts. There may be multiple kids that the person has. There may be a 529 account, so the educational investment and savings accounts that they have. There may be scholarships that come into play. And we want to make sure that the timing of all those things line up effectively, so that way they can maximize those benefits. And another one is I've seen many cases of this where the veteran is actually unaware that they qualify for a discharge of student loans, not just for them, but for their dependents and after the fact. Meaning once they've retired, they're a disabled veteran and their kid starts attending college, if they take out the right kind of loans in the right amounts, it's up to a certain limit, they could actually qualify to have those discharged. But another key thing of that is if they actually didn't tell the Department of Education to suspend the discharge of those loans, what would then happen is those loans would automatically get discharged and they lose benefit. So again, it's just somebody on their side to make them aware of what they need to do in those cases. And so I've seen several of those. And another one that comes up is just the disability rating itself. Now, I'm not going to be the claims agent. I'm not going to be making any decisions, but I see enough of these cases where when I hear a client talking to me about some of the things that they're dealing with, and maybe they were rated years ago, or maybe they just didn't bring it up because in the military, we're taught to push on, keep moving, complete the mission. That really doesn't work out great at the end of a career when you need to identify the things that have impacted you throughout your career. So maybe they just didn't do that at that point, and now they're missing out on benefits that they're qualified for. And I've actually seen cases where somebody came out with zero disability benefits, and this is really through encouragement. So what I do is I identify the gap and then encourage them to seek this out, seek these benefits out. And I've seen them get up to 100% disability. So they actually were qualified by the VA for 100% VA disability rating. That adds up to over $50,000 a year of tax-free income to them. And not only does it impact income, but it impacts healthcare benefits, education benefits for their dependents. So big deal here with that.
Yeah. So these are just all benefits that they've earned. And so it has to be very rewarding to help them, get these benefits that they have served time to earn that our government is providing. So it's great.
Absolutely.
Great work. One thing I was going to ask you about is, we talk about that the model at Foster Group is that clients are a client of the firm. And we have, 6 people here that have served in the military. So we do have some expertise within the organization when it comes to military benefits. Talk a little bit about how that is helpful and how you work with your colleagues to be helpful in all situations.
That's one thing I really love about our firm is our model doesn't limit a client's access to specialized experience and knowledge. So we work together as a team to bring the full strength of the firm to bear for that client situation, what they actually need. So In this case, that could look like a couple things. It could look like me sitting in a client meeting where there's a veteran involved and there's some benefits to answer their questions, just give them the confidence they need to move forward and make decisions. And also, and I would say this happens a lot, if a team member's working with a veteran, it's very, very common that they'll roll me in with questions and we'll just look at the benefits that they have available to them, discuss them, and then the advisor is more than prepared to go into that meeting and answer any questions the client may have.
Dan, we appreciate your service and those that also served now and in the past. And it's just great that you can serve people now in how they navigate military benefits. So thank you for that. Let's move on to the next thing now. So it is the 250th anniversary of the signing of the Declaration of Independence. And this year we also have some new investment account options that we'll be rolling out here on July 4th. Tell us a little bit about that.
Yeah, so officially they're called Trump accounts or 530A accounts. They're retirement style accounts for a child. The kid doesn't need to earn any income and they can start saving as soon as they're born. So it's a great way to have compound interest work in their benefit over time.
So who's eligible for these accounts? And I've heard the government is putting money in some of these accounts. Explain some of those details for us.
Yeah, so any child under the age of 18 by the end of the year that they file the paperwork and with a social security number is qualified for one of these accounts. They can actually file the paperwork right now, but they can't start contributing until July 4th, 2026. So there's a separate narrower piece, which is $1,000 of seed money, a one-time government contribution that's available to some children born between January 1st, 2025 and December 31st, 2028. It's going to be elected on the same form. There's a checkbox on there for them to elect that.
Okay. And then can families contribute additional money to these, or what is the limit, I guess, when it comes to contributions?
Yeah, so it's $5,000 per child per year, combined from all sources. So in this case, we're talking about family, like grandparents, parents, they could contribute to it, or basically any adult. Also, another interesting piece of this is employers can contribute up to $2,500 per employee. So if you have two children, you could choose to split it. So $1,250 in each one of the accounts per employee per year. And then of course, you're still you could take it up to that $5,000 cap. It's excluded from the employee's income, which is a great thing. And there's just some big employers that are already announcing that they're going to do this for their employees.
Yeah, that's amazing. Okay, so people are always curious too, how are these taxed?
Yeah, it's a mix. So there's two different tax treatments in one account. For that money that we mentioned that were part of the family contributions, that's going to go in after tax. So it comes out tax-free later on. Mm-hmm. For the employer money and the $1,000 government seed money, there was no taxes paid on that up front. So in the end, that's going to come out at ordinary income rates. Also, there's some compounding that's happening with these investments over time. And so any growth on that is going to come out like ordinary income. Before age 59 and a half, it's just like an IRA. Before age 59 and a half, if you take money out of it, if you don't qualify for any exceptions, then you're also going to pay a 10% penalty. So you really have to think about that like a long-term investment if you don't want to pay that penalty. The punchline here, I think, is it's a powerful compounding tool, but it's not all free money in the end. You are going to have to pay taxes on some of it when it comes out.
Fair enough. So you've given us a lot of details, a lot of numbers. Just generally speaking, who do you think is best suited for these accounts?
So like 529s, the college savings and investment accounts, and other various custodial investment accounts that are available, this is another savings vehicle for children. Where it differs from something like the 529 is there is no education restriction attached to it. At age 18, that money is theirs. They could access that money at that time for anything, but it's going to be taxed like an IRA. And again, it may have those penalties if they pull that out before age 59 and a half and didn't qualify for those exceptions. I like to think about them like a starter IRA for a child. And ideally, they're a long-term investment account that could be used in retirement. That would be a great use of these funds. Where I see in them a great fit is for families that have already covered any education goals they have, because if the education goals haven't been covered at that time, it may make sense to start with the 529. Also, if a grandparent just wanted to help their grandchildren get a head start, or just something that parents wanted to start at birth. A lot of families make it a habit of starting a savings account or an investment account for their children when they're born. And this would be a great opportunity to do that and then set them up for the future. But the magic's in the compounding from age 0. It's just really hard to beat that. So whether this is the right option for each individual family is really going to be based on a lot of other priorities and goals they may have. And that's something our team could help them figure out.
Yeah, so the beauty of this is that the child does not have to have earned income. So you can have a retirement account from birth without earned income.
That's absolutely right. No earned income. And that's how it contrasts with the typical IRA for an adult, where they have to have earned income to contribute. In this case, for the child, they do not need to have that.
So there's a lot of details. So for those that are listening, how do they go about opening up one of these accounts?
Yeah, they would use an IRS Form 4547. It's called a Trump account election form. Some of the pieces of the Trump accounts are still coming together. So the best way to stay updated on those is to go to the website, trumpaccounts.gov. That'll direct you to the IRS website. And when this is set up, it's going to be through a government designated custodian as of today. And there may be a possibility in the future where you can transfer that to a custodian. It just depends on which ones the government clears for Trump accounts at that time.
And then what about the investment options?
Yeah, so with investment options, it's going to be broad-based index funds, low cost, really great tools for compounding over the long term.
Okay, great. Well, thank you so much for all your insights and wisdom on both military benefits and on the Trump accounts.
Thanks, Gretchen. I really appreciate the opportunity. Whether it's military benefits or accounts for your children, really the value is bringing all the pieces together. Good planning equals 1, understanding your options, avoiding any missed opportunities, and then deciding what to do with confidence. If you can do those things, you're going to be in great shape.
As we celebrate 250 years of our nation's history, we're reminded that freedom has always come at a cost, carried forward by those willing to serve. To the veterans in our lives and those who stand beside them, thank you. Your service, your sacrifice, and your commitment continues to shape the country we're proud to call home. From all of us at Foster Group, it's a privilege to serve those who have served. Happy 250th America.